The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to do something totally different today right after we take a look at the DAX and the FTSE. As you can see here on the DAX daily that we're looking at, we had a really big correction from that high. Pay attention to those swings that we see up near the high, folks, because that's one of the things I wanted to cover is how markets react near highs and lows. You'll notice that it made a new high up in that area, but it could not go any higher. You know, all you had to do was wait 2 bars, and you could see that there was something, really wrong, and that's when you want to enter, because now your risk is very, very small because just a new high. But that's what risk is all about. We're going to cover a few things here this morning. Before we'll get into that after we take a look here at the DAX. We'll bring this up here and take a look at it too, and then we'll move on to what I want to show you there. The DAX was the easy one, folks. This was the daily. We pointed this out to you well when it was happening, and of course it was spot on at a perfect ABCD pattern. You had a beautiful 1.618 expansion. There were 2 large ABCDs going back well over a year, and that's what's happened. We've broken down. Now we want to see what's going to happen, from this level. Now, one of the questions that has been posed to me over the last few hours has been my relationship with Bryce Gilmore. And Bryce, as you know, wrote the books Geometry of the Markets. In 1988, I was in Chicago, and I was giving a speech there. My book had just came out, Astro Cycles, The Trader's Viewpoint, and I was sort of a hot commodity at that time. And there we were at, I think it was the Warwick Hotel in Chicago. There were about 300 traders there. It was mainly a Astro conference and technical conference. A little bit of Astro, mostly technical, and Bryce was giving a speech also, and I had heard of him, but I didn't know anything about him. And I was standing, by my booth talking to a couple of my students, and one of my students came rushing out of Bryce's room, and he said, Larry, he said, you've got to come in here and listen to this guy. He said, he's really interesting, and he knows, things like you talk about. And so I walked into the room, at the back of the room, and as I walked in the back of the room, he saw me. I had never met him before. He said, there's Larry Pesavento, the Fibonacci expert. He said, why don't you come up here in the first row and learn something? And everybody cracked up laughing, and I did too. I thought it was rather funny. And so I went in and I sat up at the first in the first row, and he started to discuss the ratios of sacred science, Fibonacci ratios, and all the other ratios that we look at, the square roots of 1, 2, 3, 4, 5, the reciprocals, and the square roots of those numbers, and it just literally I was blown away so much that I was almost trembling, and he was right. I did learn something. Well, anyway, after the show was over, he lived in Sydney, Australia, and we had a really nice trading house in Pismo Beach. I asked him, I said, well, are you busy? Why don't you come out, and spend some time with us in Pismo Beach? I said, you got an extra car there, really nice house, and, we can trade together, and you can teach me some of this stuff, and I'll show you some of the few things that I know. So he came out, and that led to a really nice relationship that I had with him until I moved away from there in 1994. But he would come there every year, sometimes as long as 3 or 4 months, and he would live in the trading house where Jim Twentyman lived there too. It was a pretty large house, so there was enough room for everybody. And we had a trading room downstairs that was, oh my gosh, it was huge. It was about 30 by 20, and we had 3 or 4 desks in there and a couple of, some nice monitors. The monitors that we had were no bigger than 22 inches at the time, but you can imagine, that was pretty big back in the old days when 14-inch was the normal. But basically, I want to show you what Bryce really did. He had a program called the Wave Trader that he was working on, and I want to bring this chart up to show you. This is a chart now, and this is my chart out of Ensign, but this is nothing more than a 4-hour chart, and all it's doing is showing the patterns and the ratios. The Wave Trader pattern program did this automatically, so you could see, where the patterns were coming together, and then it also gave you a ranking of whether it was a good pattern or a bad pattern by what the ranking was between 1 and 10, 10 being the very best. Well, when you got to a 10, you either be a buyer or seller. The problem was, if it didn't work right away, oh my gosh, it was a failure, and away it would go. Dr. Steve Shapiro and I worked on these things with Bryce for, oh my gosh, weeks and weeks and weeks, and we had weeks there. It was just amazing how well it would work. But boy, when it failed, those were some of the greatest trades you could ever imagine, because this told you that something had happened. There was a big change going on, and that's what really occurred. Now, what I want to do now, I'm probably going to have to do this in 2 segments because it's a relatively long segment. But let me show you. This is one from the MT4. These fellows were these young Boris, and I can't remember the other guy's name, were my students 20-some years ago when I first came here to Tucson. One second here. I've got to get this up here so we can take a look at it, and then we'll be able to look at it. You'll see this is basically, basically a Gartley pattern. As you see here, it doesn't have the ratios put in, but it does have the pattern put in. TFNN has, David White has a program that is really good. And it does the same thing, and it sends these out on the different stocks that he sees each day, and it's automatic, and it shows the ratios, and it's really nice. But that's the key to it. But the one thing that you have to do is when you're looking at these ratios and you're looking at the patterns, it really doesn't mean anything until you do one thing. And what is that? It's define how much risk you're going to have to take on the trade. And that's what trading is all about, folks. It's not about how much money you make. It's about how much money you don't lose. Remember Warren Buffett, folks. He has 2 major rules in investing. 1, never lose money. 2, don't break rule number 1. And we can't do that in trading because taking losses is just like breathing. You have to. In order to take a risk, you have to take the corresponding potential loss or profit in it too. So whenever you have an opportunity, you have a risk. That those words are interchangeable in the Chinese language. It just depends on how it's used in the sentence. Risk and opportunity are the same. You see this a lot of different ways in the Chinese literature, especially in the yin and yang. It's there all the time. So we're going to be there. By the way, I know some of you folks are interested in the grains. I'm going to cover some things that we've gotten from Rich Anderson and Simonly here the last day or two to talk to you about Argentina, the weather, and how you handle it, and bada bing, bada boom, whatever it is. But I want to go through this material with Bryce Gilmore because it's really important to understand what trading is all about. We'll get back to this, and we're going to cover the E-mini S&P next. So let's take a look at this when it comes up, and we'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're talking about Bryce Gilmore and my relationship with him over the years, and to me, no one, stands in his on his pedestal when it comes to technical analysis. But to me, the one who holds the greatest pedestal, of course, was Mark Douglas, because he talked about the mental part of trading, and that's 90% of all trading, folks. It's that 9-inch cycle between your left ear and your right ear. But I posted a chart here. This is from one of our friends from across the pond that is a follower of Bryce Gilmore and also of Trade What You See. And what he's done here is you looked at this is a wave trader program, and it's showing you the patterns. Everything is set up, and you'll notice that he's looking for a price to come in around the 61% retracement, right around the 2709 level. Now that should be key support. Now the key word is should be. There's two words there. Possible, maybe, who knows? We don't know. But if you buy there, if you buy at that level of 2709, you're trading a contract that's worth basically $54,000, okay? So how much do you risk on the $54,000? Well, you have to decide that. My assumption is because the harmonic number in the E-mini S&P is 5.5 points, you would risk 6 points. So you buy at 2709 and you put your stop at 2703. Does that mean that you're going to be right or wrong? We don't know that, but nobody else does either. I want to tell you my most favorite story of Bryce Gilmore. We were at Steve Shapiro's house. He lived down at the beach. I lived up on the cliffs there at Pismo Beach. And any times we had guests in, and this time we had a guest in from New Orleans, a really nice doctor that had been with us for several years, came out all the time to see us. And Steve's mother, Mumsy, would cook breakfast for us. And so we were there in the trading room, went down this hill to trade with or to have breakfast with Steve and everybody. And while we were there, we were talking about the Treasury bond market. And Bryce said, Treasury bonds were a sale that day. I don't remember the exact price, but I'll just say it was something like, 102. Remember, interest rates were on their way down, so the bonds were still their interest rates were about 8%, 6%, 7%. I don't know what it was high, but anyway, the bonds were, let's say, just 102, 102.10. And he said he wanted to sell bonds at 102.10, and he wanted to put a stop at 102.10.11. That's one tick, 31.25. And I said, Bryce, I said, that's too close. I said, that's the largest market in the world for commodities, and one tick is just one guy, making a bid, And I said, that's too. He said, look, he said, if Treasury bonds hit 102.11, I'm going to take all of my books, go out to that pier there at Pismo Beach, throw them into the ocean. I'm going to go back to selling exotic cars in Australia. And I said, oh, come on. So he was from Australia, so he couldn't have a U.S. trading account at that time, so he was using my account. So he said he wanted to sell 4 U.S. Treasury bonds at 102.10. Well, after breakfast, we went up the hill. Bonds were now open and trading. They were 102.08 or something. They got up to 102.09, 102.09, 102.10, 102.10, 102.09. And he was going to play golf that day with Mark, who was visiting from Chicago, and a couple other traders. And so we finally got filled on the partial order. He had 4 in there. I had some in there, but we got a partial order. It got filled at 102.10. Well, he was in the driveway putting his golf clubs in the trunk of the car, and he yelled up at the little patio or the veranda that was there, and he said, where are the bonds trading? And I said, they're 102.08. And he said, did we get filled? I said, we got filled on 3 of the 4 contracts. And he said, okay, that's good. And so he said, take a profit at 101, 101.30, 101.28. That was down $500. And I said, wait a minute. I said, if this number is so bullish, why are you just going to take a half a point profit? He said, that's my goal, a half a point profit. He said, it's $1,500. That's good for the day. I said, okay. He got in the car and he drove up to the stop sign up on Ocean Avenue there in Pismo Beach to turn left. And as he was turning left, bonds broke 1.5 points. Now, he was filled a half a point lower. They ended up being down 3 points that day. And he left $5,000 on the table. And when we went to dinner that night, there was a whole bunch of us that went to dinner. He never asked me, what the bonds did. He knew that he got filled, but he didn't know where they closed. And I didn't say anything to him because I didn't want to start a conversation. The next morning, he got up and he said, why didn't you tell me what had happened? I said, well, it didn't make any difference. I said, because you were already out of the position. He said, you're right. And I said, why were you so interested in this price of 102.10? And he said, well, all the numbers that I look at came together at that point, and if they went to 102.11, I said it would be no good. I said, Bryce, that's not good. I said, because you've got thousands of traders in that pit, and all it takes is one guy, to make a bid at 102.11, and then, and that's pretty much what happened. It never hit 102.11. He said, Larry, he said they couldn't go to 102.10, and that was it. That was the whole story of it. Now let's take a look at this pattern that we're looking at here in the E-mini this morning. We've got this number coming in at 27.09. I haven't checked the prices really, and we got down to 27.15 so far. And here again, see, let's just go to a smaller time frame, because here's what happens to traders is they go from one time frame to another. Now let's take a look at this same thing on the 5-minute chart. Let's just bring this up, and we'll bring it up to see it. But believe me, this is done by somebody who is working with the Wave Trader program, and he's looking at the same thing. This is a 5-minute chart. I got this an hour ago, boys and girls, when it was up here trading at around 27.19 or something. And here we are. We got down to that 78% level right at 27.15. Now, what does that mean? Do you buy it there, or do you wait for the larger one? This is what you have to decide, is which time frame you're going to trade on. So if you're going to trade on a 5-minute chart, you only look at this chart. You don't look at the 15 minutes because they're different. Look how different they are. They're like mother, God, and country. As a matter of fact, if you were doing the Wave Trader program, you'll notice on the left over there, it gives you all the you don't understand the ratios that are there, the alternates and all that other stuff. But what it's doing is it's giving a ranking of where the numbers are and where they should come together. So on the 5-minute chart, they're coming together at 27.15. On the 15-minute chart, they come together at 27.09. So you're the one that has to decide what time frame you're going to trade. I don't trade 5-minute time frames anymore because I don't like to watch the market all the time. And that's the end of that story. So we're going to follow this. We got another half hour of the program. We'll see how this ends up. But if you were to buy it here at 27.15 and you're risking, say 3 points on that, your first profit objective would be 5 points. So your first profit objective would be 27.20. And that would give you a $250 profit for the $150 risk you were taking, and that would be a profitable pattern. And then what you could do is put your stop at break even or trail it. We'll be right back. We got to talk about the grains, folks. A lot of things happening. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to talk a little bit about the grain markets. I posted into the Tiger Room today something from the Lynn Group, which is basically one of the premier grain outfits out of Chicago. And Simon Lee, Rich Anderson subscribe to this along with many others. And what they're doing is they're showing you what their outlook is and what they're looking for. Now, this is based on fundamental information. I bring this to you because, we don't use fundamental information in pattern recognition. We only use the technicals. Our theory is if prices are going up, there's more buyers. If prices are going down, there's more sellers. And I'd like to prove that to you by the next chart here. If you remember last spring, we were having one heck of a big drought in the United States, and the wheat market, particularly Minneapolis wheat, was going absolutely crazy. And now I can't even find that wheat chart, or that Minneapolis wheat chart. Where is it? Oh, golly, I've had it in here all morning. Shut the front door and raise the rent. Oh, that doesn't make me very happy to lose it. But anyway, it was going, straight up. It hit like $15 and something, and now it's down, $25,000 a contract lower. And it's basically showing you that the news follows the trend. And that's what it's really going out. Let's talk about what's happening right now. The first one I want to look at, of course, is the one we looked at yesterday, and that is the soybean meal. And we got to get up here so we can take a quick look at it. We'll look at this right here because you're going to see this is on the daily chart. And what we're doing now is that number that you're looking at the high up there at 381 was the 61% retracement on the weekly chart. In the soybean meal. Now remember, we've been very bullish soybean oil here. It's been moving in our favor for the last 4 or 5 days. Whether it's going to continue or not, no one knows that for sure. But that's that's really how these things start. Now here's another service that they look at. I just want to bring it to you. This comes from Radiant Solutions. It's a weather service out of I don't know exactly where it's from, but this shows. I'm just going to show you what they're looking at because I don't look at these kind of things. This is the precipitation map for Argentina. You can see that what's going on at that level. It's all radar induced, of course. And then what we're going to do is next thing we're going to do is to take a look at the temperatures down here. Remember, when we are in the wintertime in the United States, it's summertime in the southern hemisphere. And we'll take a look at this chart. Now, this comes from the same thing. They get these every morning to show how the weather patterns are looking at. As you can see, there's a great deal of heat and dryness all across Argentina. And if you ever get a chance to go to South America, try to go to Buenos Aires, Argentina, because that is as close to Italy as you're ever going to get. They've got little colonies in there that I swear are just like Sicily and northern Italy and Florence. I mean, it's just amazing how many Italian-speaking people are there. So it's really, really spectacular. Okay, it is. Paris. If I had my choice between Buenos Aires and Paris, I would take one trip to Buenos Aires opposed to 5 trips to Paris. That's how much I liked Buenos Aires. Okay, let's take a look at where the markets are right now and some of these things with the grains. Now, this one thing, we've been bullish on these for quite some time, mainly because of the fundamentals that we've heard from Rich Anderson and also Simone. But look at the double bottom that we had, down at this level. This market really gave you a really good buy at the 383 level, and we're trading 15 cents higher than that right now, and it looks like it's working on up. Now 15 cents is not much in the grain markets, and here's where our friend Simone Lee can help us. Cy handles about 2% of all the crops in the United States with his hedging operation called Sylvia's Financial. Now, at this price, at $3.97 in Christmas corn, the farmer can make 50 cents a bushel. And so everything is done by computer. They know how much it costs, how much time he's put into it, what the cost of the rental on the machines and the cost of the land. Everything is figured into this formula, and they know that at $3.97 a bushel, they can make 13% on that crop. Well, if they can make 13% on that crop, that's what their goal is. They will hedge that crop. And now what happens if the drought comes in and the market goes to $4.50? Well, he's still locked in at that price. He's not going to make that extra amount of money, except most of these farmers that Cy works with also do what we call a Texas hedge. They're long the futures and they're long the cash. So they can literally go into the cash market or the futures market and buy these grains and become a farmer again, but they're a farmer on the board at what they call the Chicago Board of Trade, which is now the CME, and that gets them long the grains, but they don't have it in the field. The stuff that's in the field has already been hedged. So that's how all that works. I hope that helps, and I'm going to have Cy on here. This is really, he's really busy now because of what's going on in Argentina, and he does a huge business in soybean oil and soybean meal with the crush and all that. So he is absolutely swamped, especially early in the morning. That's his busiest time. But as soon as he gets a break, which will be in a week or two, we're going to have him on for probably the whole show so he can go through some of these things, because we have the planning reports coming up here pretty soon, and then we'll be able to to take a look at it. Now, the next one we would like to take a look at here are the November soybeans, because they're getting up into an area that's going to be really interesting, because here again, you can see there's a big ABCD pattern up here at this 1039 level, which is also a 1.27 expansion, which makes that a butterfly pattern. So at that level, you really want to be careful. Now, here's what's interesting about that. If we get much above that 1039 level, say 1045, you're looking at a market that could be really ready to run, much like what soybean meal did, just not too long ago. Let's just show you what it did. This is the weekly chart of the meal, and we were watching this very, very closely. And you'll notice that we gapped up here a week ago at the 345 level, taking out those old highs, and look what happened. It rallied $40 a ton, folks. That's $4,000 in a week. That's equivalent to 80 points in the S&P. So that's a huge move. So that's really, really going to be looking at what's going to be happening here. So we have to pay close attention to it. Longer term, we've looked at that soybean oil chart, and it looks like a really good possible trade because of the triple bottom that we've had. It started to work. Whether it's going to continue to work, remains to be seen. But now the risk factor is down to virtually nothing. And now we will wait and see, how it's going to affect the next thing that we look at. Now, I want to switch over here just a second here to I've got two of them in here I wanted to show you, because they're very, very important. This is my opinion, of course, which only counts with 41, 42. Where's 42? Okay, let's do the wheat here, because I want to show you this one. This is wheat, and this is the Christmas wheat. This is the new crop wheat coming in here. Let's just get this up here to show you the ratios and things that we look at. And there we are. You'll notice that the correction that we had in January, look at the correction. There's your harmonic number in wheat. Did exactly the same thing recently, so it looks like we're still working higher. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I've posted the chart of that E-mini, that 5-minute chart that we got from our friend across the pond. You'll notice that we went right down to that level of 27.15, and we rallied up and we made the 5 points at 27.20. And what did we do? We went right down and made a new low, which is, you know, if you were in that, you would have made your profit on your first one. And whether you were gotten stopped out of your second one or not, if you had second one, remains to be seen. But if you look at this, this is really telling us that it looks like the market wants to get down to this 27.09 level that looks, you know, very, very interesting. Now, this is a 5-minute chart, folks, and I don't like trading 5-minute charts. I really like trading, you know, at the very minimum, you know, 15 and most likely an hour or 4 hour. Those are my favorites. You know, those are the ones that look the best. But if you look at this 15-minute chart that we posted when we first started talking about this, you'll notice that there's a lot of things happening at this 27.09 level, and that's just been, you know, reconfirmed by what's happening so far this morning. So we'll have to be watching it a little bit closer each day just to see if that's going to. But you can make a living trading the 5-minute chart. The problem is it takes a great deal of effort and a lot of concentration. So you don't want to be trading all day. You want to trade for, you know, an hour or two, and that's about it. And don't watch the monitor. The monitor is not your friend. Oh gosh, I keep saying that, but you just never know how much that monitor, you know, damages your thinking. Because if you're long, you focus on the upticks. If you're short, you focus on the downticks. And the reason you do that is because your body is ready to, or is programmed to stay away from having pain, and that's pretty much, you know, what we're watching as we're doing that. If you remember, early this week, we had a really nice chat with Rich Anderson. That was on Thursday, and he talked about the cattle market, and also Mr. Z in the room here was talking about cattle up at that 127 level. They've now broken over 2 handles to the downside, so that is beginning to look like it wants to work a little bit lower. And the same thing in the feeder cattle. They're doing pretty much the same thing. Folks, when I posted those things about the fundamentals, about the grain markets, what the weather patterns are, all I did to do that is to show you what other people are looking at. These are people that check the fundamentals of what things are looking at. But I really don't do that. I did that many years ago, but you know, after enough technical analysis, it's proved to myself that I don't really care what's going on with that, because you watch to see what the people are doing. If they're buying, prices are going up. If selling, the prices are going down. That's the Big 10-4. That's really all you have to really worry about. And so as you're watching that, that's a real key, to remember that that's what happens as you do this stuff. So that's the main thing to remember. That's at least that's how we look at it. And I don't know if the beans are going to hit the 1039 level or not. Who knows? Nobody else does either. But that's what the target level is on the beans. We don't know how much it's going to be different from that level, but we don't know. Okay, someone has a question here about what's the most important chart of the week. Let's just get this up. This is an easy one, and that is the U.S. dollar index, folks. We covered this in the newsletter this past week, and as you can see here, we had a false breakout to the bottom, and then the market turned like a rabbit, and away she went, and that's telling us a pretty good bottom has been hit here in the dollar index, and we cover that each week in the newsletter extensively because the dollar index, the U.S. dollar, is dependent upon the interest rates and also the grains and anything that's exported, and so it's a big thing, especially now with interest rates the way they are. We're losing, we're in the midst of a little rally here that we thought would happen, but I don't think it's going to stay much longer. We posted that chart of the Treasury Bonds when we were talking about Bryce Gilmore, and as you look at this, you can see here that I don't think we got much above 144.05. If we get above that, then you could get up to that 147 level if you can close above the 144.20 level. But at 144.05, you're going to run into some pretty interesting resistance, is what it would look like to me. So whether that's going to be the case or not, we'll have to just wait and see. We're trading around 143.24 now, and that's what we're watching. Okay, folks still ask about the gold. Boys and girls, gold has all the ability to bounce of one of those little dead cat bounces. To me, gold is heading down to around $12.99. There's going to be a magical number around 13. It'll probably go through that, but watch it around $12.99. That's the breakout of those old highs. But the trade to really watch, and the one that I think is, this would be one that I would put the old Sister Mary Perpetual at the Widows and Orphans home into, and that would be buying silver at $15 an ounce, because on the long-term dailies and weeklies, you'd be making a major 3-drive to a bottom pattern at a 78% level, and boy, that would be that's long-term too. But that comes in around $15. A little over $15 an ounce. In silver, we're trading around 16.5 as we go to press today. But that's the one, if it does happen, would really be the one that you really like. Right now, gold's trading at $13.29, and as we mentioned, $12.99 is what we think the objective would be. And if $12.99, folks, we're down. We would be down 34. We'd be down $68 from the high. And that's two harmonic numbers. A harmonic number is a number that you see over and over again. And 34 times 2 is 68. So that's another reason to really watch this gold down here. It's only $29 from where we are right now, but it can certainly make that without any trouble at all. So we want to watch it, very, very closely. I think it would be important to, keep a close eye, on that. We're trading around 27.16 in the S&P. To me, we're talking about just 9 points down here, 10 points, only 7 points down to that number we're looking at 27.10. And here again, here's a perfect example. At 27.10 or 27.09, you're going to have several patterns coming together. Now, is it going to stop there? I don't know. But you only have to risk about 5 points, $250, to see if it's going to be right, because you could go all the way down to the 1.618, which is 27.06. So the difference between 10 and 6 is 4. So you got to put your stop at around 6 points. Your stop would be 27.04 if you're buying at 27.09. So and maybe it works, maybe it doesn't. It's just probabilities, but when you're dealing with a 5-minute chart, you have to trade the 5-minute chart. You can't trade the 15-minute chart. So I'm focusing on that 15-minute chart. The 5-minute chart means, diddly squat to me. I mean, here we are at 27.15, and it looks like it's a mortal lock to make 27.09. But, I could, go to the McDonald's and pick up a cup of Joe and come back, and it could be trading at 26.80 because these markets go crazy. And that's what you have to do is you got to decide how much does Larry want to risk on this. It's not how much I can possibly make. It's how much money I'm going to have to risk to see if it works. So I'm going to get off my soapbox, folks. Only a few more minutes. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to keep a really close eye here today. You know, we're in a down week, you know, after the big up week that we had last week. We stopped right at those Fibonacci numbers in the NASDAQ, the S&P, the Dow Jones, and the Russell. If we close really strong today, up to 300 points in the Dow, that would be extremely bullish. But if we go the other way and close a lot lower, that would make it even more bearish. The other question someone's asked me, the importance of that 2709 number that we talked about. Well, that number is okay, but the important number to pay attention to is 2706. That's that 1.618 expansion number. If we break below that, we're breaking below, certain areas that make it vulnerable to a much lower level. So we'll have to just wait and see how it's going to unfold. Next week we're going to have Norm Winsky as our guest on the 28th. We got a full moon coming up this coming week, and Norm's got some great ideas and some terrific trades that he's always shared with us. But we'll watch it very, very closely. Now, those of you that happen to be trading cattle, and I know there's a few of you out there because you listen to Rich Anderson quite a bit, you wouldn't want to let cattle get to the 127 level any longer, because that would have been your entry point, and you don't want to have a 2-point loss turn in, or a 2-point profit turn into a 2-point loss. That would be a huge swing, because if you're making money, not a small amount. If you're making $50, $100, that doesn't mean anything. But if you're up $600, $700, you don't want to give that back, because that's part of your risk capital. So that's what you have to do, is basically what you're looking at. And so that's the main thing that you want to keep in mind. It's the amount of money that you have at risk, not how much money you're going to to lose or to make. It's how much money you could possibly lose. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
No matter what kind of trader you are,